Coming up on Business Incorporated. Global cocoa market forecast to reach $15.5 billion by 2027. And Ghana's president announces measures to curb economic downturn. Plus, South Africa's petrol and diesel prices see significant increase in November. Hello and welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday. Starting in Africa, we see it's negative sentiment across board with the NGX there down 0.49%. We're seeing that bearish trend continue in the local bourse there. South Africa GSC also down 0.36% at 66,627 points. We'll flip over now to Egypt there. We see it's down marginally by 0.08%. And in Kenya, they closed Monday. That's Friday, negative, down 0.93%. Let's move over to the Middle East. It's also negative sentiment we're seeing at intraday, but Qatar gains more than 0.5% in that market there. We see Abu Dhabi down 0.13%, holding that 10,000 level. Dubai, 3,323, down 0.77%. Let's flip over to other parts in the Middle East that we track there. We see it's also negative sentiment, just Qatar there holding gains. Qatar 0.59%, Saudi down 0.56%. So it's negative sentiment across the board there. Let's move over now to Europe, where EU trade ministers are holding informal talks in the Czech capital, Prague. The meeting is taking place against the backdrop of the continent's cost of living crisis and prevailing concerns about energy security. Well, to talk more about this now, we have Kate Ferguson, DW there. Join us, tell us what's happening. Well, Kate, what are the EU trade ministers hoping to achieve with this meeting?
So this meeting is really about fostering resilience in the European economy, which, as we all know, has seen so many shocks recently. And trade is really at the heart of the crisis Europe is experiencing. If you think about why things are getting so expensive, for one, it's because of insecurity in the energy market. Now, this was already an issue before the war in Ukraine because demand had risen so fast after the pandemic. But things have really come to a head now because Europe no longer sees Russia as a viable trade partner. Now, another cause of this cost of living crisis is what's happening in China. Now, unlike most of the rest of the world, China is still in peak lockdown mode, meaning that factory output has slowed down. And that, of course, is bad news for European companies that rely on things like semiconductor chips, as well as other key components. And what trade ministers really want to figure out is who is a reliable partner for Europe these days? Who should be considered a friend or a foe? And what needs to be done to shore up the European economy in such a way that it can withstand shocks like the pandemic and the war in Ukraine? These geopolitical events, they've shown just how entwined the global economy is, and untangling those threads is an extremely complex task. They are going to have their work cut out for them.
Yes, quite complex. But what about Europe's trade relationship with the United States?
Tricky time for EU-US trade ties, and there are a few reasons for that. For one thing, the transatlantic relationship in general came under big strain during the previous administration, and to be frank, President Joe Biden has so far not really convinced European leaders that he wants to repair it. The main issue at the moment concerns this $430 billion Inflation Reduction Act. Now, that legislation is all about encouraging companies to invest in America and encouraging consumers to buy American. Now, specifically, it includes incentives for renewable energy companies and electric car makers to invest in the American market. That is bad news for France and Germany, though, because both of those countries are putting a lot of energy into promoting electric mobility and renewable energy. And they're now fearing that they could lose billions of euros if companies move to the US to make use of those subsidies. French President Emmanuel Macron, he's been especially vocal about this, and he's called for an equivalent Buy European Act to protect European manufacturers. Germany is really unhappy about this as well. It's seen firsthand what kind of thing could happen. Just last week, the chemicals giant BASF announced plans to cut jobs at home. They were complaining that gas prices were 6 times higher in Germany than in the US. So trade ministers will definitely be hoping to come up with a unified stance before bringing this up directly with US officials next week.
All right, but investors will be keeping an eye on this meeting, I'm guessing. How the market's looking?
So this is really an informal meeting, so we probably won't see anything substantial in terms of policy, though investors will be interested in the mood expressed by trade ministers, especially when it comes to the future relationship with the EU's biggest trading partner, that's China and the United States. But October's inflation numbers, they will be their big focus today, as well as those third quarterly GDP numbers. Both of those figures will give some indication of how deep we're into this crisis and how close a recession might be. So a lot of issues to keep an eye on there.
Right, all eyes on those markets. Thank you so much. That was Kate Ferguson right there in Berlin with the details. All right, now let's move over now to the UK. We have Juliana standing by right there. Great to have you, Juliana. So data from the Bank of England indicates that the number of mortgages approved by British lenders eased back in September. What does this indicate? Hello, Juliana. All right, I don't think Juliana can hear me right now. We'll try and get Juliana right back. Let's move over to Asia markets now. We see shares in Asia Pacific were mostly higher as China factory activity missed expectations, and markets look ahead to the U.S. Fed meeting later this week in Japan. The Nikkei 225 rose 1.78%, closed at 27,587 points, the highest level since September 20th. In China, the Shanghai Composite was down about 0.77%, while in Hong Kong, the Hang Seng index was down about 1.18%. We see it there, down 1.18% at 14,687 points. Well, gaming stocks rebounded following news of an e-visa system for mainland Chinese visitors to Macau. China's National Bureau of Statistics released its Purchasing Manager Index data with the official manufacturing print coming in at 49.2%, missing expectations. And we see all that happening in the market there. Let's move over to Wall Street now. We see U.S. stock futures were lower in early trade ahead of the final day of October, with the Dow Jones Industrial Average poised to clinch its best month in decades. The S&P 500 futures there, see it, that's the last close there, 2.59%. But for 0.35%, talking about the futures, while NASDAQ 100 futures dipped 0.5%, Dow Jones Industrial futures ticked down about 0.3%. Well, the Dow is up 14.4% in October, which would be the best month since 1976. The S&P 500 NASDAQ Composite are also up for the month, putting Wall Street on track to snap a 2-month losing streak. The gains have come despite a mixed third quarter earnings season from major companies, which is down, slowing, growing, and a few major disappointments from large tech companies. Later this week, the Federal Reserve will hold its policy meeting and announce its interest rate decision. Several countries will report inflation data also this week. All right, let's head back to Juliana now. I'm sure Juliana can hear me now. Great to have you, Juliana. So I see the data from the Bank of England is showing that a number of mortgages approved by British lenders eased back in September. What does this indicate?
Good afternoon, Laddie. Glad you can hear me right now.
Yeah.
You're right. We have had data from the Bank of England that shows mortgage approvals dipped 10% between the months of August to the month of September. There were 77,000 approvals, which dropped to about 66,000. I think the big issue has been that mini budget, aka maxi shambles, which the Conservative government are hoping they can bury forever. But unfortunately, they can't, because there are so many victims from the kind of market turmoil that was caused. And one of them is for mortgage owners, and for many people who were looking to buy a first home, or were remortgaging their home, or were looking to buy a second home. Literally overnight, they were seeing that some of their mortgage products that they were looking at, wishing and wanting, disappear, and that's caused a huge issue, and it is likely to cause further pain. On Thursday, we are expecting the Bank of England Monetary Policy Committee to gather, where we are going to expect to see interest rates rise for an 8th consecutive time in this country. Some suggest it will rise by 0.75% to 3%, which will be the highest we've seen in this country for several years. On the one hand, it's a good thing because we know that the Bank of England are trying to bring down inflation, which is currently at that 40-year high of 10.1%. But on the other hand, making borrowing cost more is putting mortgage owners at risk. We are hearing many of them are starting to not pay, default on some of these mortgages because, of course, they have so many other things to deal with. So, yes, not great news, and the mortgage pain is likely to last for some time now.
Yeah, so much for the central banks to take into consideration, at this point in this big fight, against inflation. But how are the markets looking at intraday?
Market's looking pretty decent. We've had a couple of corporate news. First of all, the big one is this windfall tax. Banks are all surging at the moment because there were some suggestions that perhaps there could be a windfall tax because, of course, with the cost of borrowing costing more money, banks have become more profitable, which is why we saw a pretty decent Q3 trading update last week. Suggestions, perhaps, no, there won't be a windfall tax on banks is one of the reasons why they're all higher at intraday. And then we've got some really interesting news about the International Consolidated Airlines Group. This is the parent company of British Airways, Vueling and Aer Lingus. Perhaps they want to buy EasyJet, the budget airliner, one of the biggest budget airlines in the world. That would be some sort of takeover. I don't know if the Competition and Markets Authority would even allow it, but as soon as this news came out, it sent the share price rocketing, which is one of the reasons why the FTSE is in good shape at intraday. The all share is up 0.09%. The FTSE 100, that's up by 0.15%, and the FTSE 250, the domestic market, is down by 0.20%. In the currencies market, the British pound is currently trading down on the US dollar by 0.30%, down to on the euro by 0.14%, but the British pound is trading up against the Japanese yen by 0.20%, Laddie.
Right, I'm sure all the investors looking for that sweet spot to get back into this market. Thank you so much, Juliana. All right, we'll take a break now. When we come back, more stories from the African continent. That's a moment. Do stay with us. This is Business Incorporated. Welcome back. Still watching Business Incorporated live on Channel Television. Well, taking the conversation forward now, fiscal sustainability concerns in Africa have increased recently following heightened fiscal vulnerabilities attributed to rising global inflation, rate hikes. We have Telema research recently updating their Sovereign Debt Sustainability Index to assess debt risk in emerging markets. Let's talk to Patrick Karan now, senior economist, Telema Research. Join us via Zoom. Great to have you on the program.
Hi, Lottie. Good to be here.
Yeah, so quite an interesting metric you got there. But what did you look at? Talking about the metrics now, for this research, and tell us more about your findings.
Sure, Lottie. So the scorecard that we compiled puts together 27 metrics, primarily from the IMF and World Bank. They're broadly divided into three categories: fiscal policy and debt dynamics, debt stock and service, as well as debt composition. The raw data is then normalized by stating it in terms of standard deviations better or worse than the median country in the sample. And those scores are then averaged to arrive at a composite debt sustainability score across a list of 72 emerging market countries.
Quite interesting. But what countries are at risk of, debt defaults in Sub-Saharan Africa?
Well, besides Zambia, which has already defaulted, our scorecard flags Ghana and Kenya as being the most vulnerable countries. And looking beyond Sub-Saharan Africa, in North Africa, Tunisia and Egypt also flag as being particularly risky.
Yeah, quite interesting there, because we've seen, debt issues. Some countries looking at, restructuring, their debt. Some not sure, what they want to do next. But how can investors use this debt sustainability index, in making investment decisions?
We advise that the index is used to flag countries that may be at risk of debt distress, but also flag that it should be used in conjunction with more traditional country risk analysis. The indicators are chosen for comparability across a wide set of countries, But in many cases, more timely or thorough indicators could be available from the country's official data sources. There's also other indicators that are omitted that might be a significant cause or signal of distress, including institutional factors, among others. So it's really important that the index is used as a top-up filter in conjunction with more bottom-up qualitative country-level analysis when trying to discover which countries might be at risk of default.
Quite interesting. Let's look at the dollar now. It's had that incredible run this year, but we saw the dollar actually ease. Do you think the top is in for the dollar, or can we expect it to start rising again?
Well, the broad consensus is that the dollar is overvalued. It's up by about 12.5% in real effective terms this year and is about 20% above its pre-COVID 20-year average. That said, the dollar is likely to continue appreciating until the Fed hits pause on its hiking cycle. Markets are currently expecting that in the second quarter of next year, with the Fed funds rate peaking around 5%. But if inflation continues to surprise to the upside, then it's possible the Fed will have to go even beyond that 5% level, which could create an even greater flight to safety and risk-off environment for EM assets. So I think it's still too early to say emerging market currencies are out of the woods at this point.
Right, too early to call, but we'll keep our eye. I'm sure investors are watching, the dollar index with all attention right now to see if it starts that major move again. Thank you so much, Patrick Curran, senior economist at Telema Research. It was great having you.
Thank you, Lottie. Good to be here.
Thank you. All right, now moving on to other stories. Now we see the global cocoa market size has been forecast to reach about $15.5 billion by 2027. Registering a compound annual growth rate of 4.3% from 2021 to 2027. Market size, which is valued at $12.8 billion in 2019, according to analysis by Allied Market Research. Growing demand for chocolates is a key factor boosting the demand for cocoa in the global market, with the chocolate industry alone estimated to generate more than $100 billion a year. The analyst estimated that more than 40% of the global cocoa produced is the key ingredient for making chocolates, as well as other confectioneries and cosmetic products. The projected growth of the market could be good for world's leading cocoa-producing countries, such as Ghana, Cote d'Ivoire, who boycotted meetings of the World Cocoa Foundation on cocoa sustainability in Brussels last week. Both countries accuse multinational chocolate companies and traders of blocking measures to improve cocoa farmers' incomes. And the Ghanaian government has announced sweeping measures to curb the rising cost of living, especially fuel and food, to boost the country's faltering economic growth. The actions include improvement in revenue collection from the current tax revenue to GDP ratio of 13% to between 18 to 20%, review of the reforms in the energy sector, capping of statutory funds, implementation of the Exemptions Act, and a new property rate regime. A televised address to bring the country up to speed on the economy, President Nana Addo Akufo-Addo outlined with optimism a raft of new measures which he said would break the pace of the current economic downturn. These measures were adopted after a cabinet retreat that was necessitated by soaring food prices, steep depreciation of the cedi, and the rising cost of fuel, sparking public outcry for an improved economy. Part of the measures seeks to sanitize the foreign exchange market to ensure that banks and forex bureaus operate along international best practices to make the market more resilient against external vulnerabilities. And South Africa's Department of Mineral Resources and Energy has published the latest adjustments for November 2022, showing a big jump in prices for both petrol and diesel. The price of petrol will increase by 51 cents, taking the price to 22 rands and 87 cents per litre, while diesel will increase by 1 rand and 44 cents, taking the price up to 25 rand and 25 cents per litre with effect from the 2nd of November. The average international product prices for petrol, diesel, and illuminating paraffin decreased during the period under review, but the rand depreciated against the US dollar on average when compared to the previous period. And the South African Commercial, Catering and Allied Workers Union says an indefinite strike looms over Massmart and its macro stores as wage disputes remain deadlocked after months of negotiations through the Commission for Conciliation, Mediation and Arbitration facilitated processes. Massmart has offered macro employers a 4.5% increase, which translates to a 300 Rand monthly increase, while the union is demanding a 900 Rand increase across the board, or 12%. Whichever is greater. Massmart said that the union's demands are unrealistic, and the deadlock is in negotiations been ongoing for months, which prompted the company to put strike contingency plans in place before it commenced. And now the European Union has announced another 166 million euro grant to support Tanzania's Blue Economy initiative. The money is expected to contribute to implementation of the Global Gateway, the new European strategy to boost smart, clean and secure links, digital energy and transport sectors, to strengthen health, education and research systems across the world. It's the second package of grants to Tanzania. It's the EU announced 80 million euros earlier this year after discussions between President Samia Suluhu Hassan and EU leaders in Belgium earlier this year. European Commissioner for International Partnerships says worldwide Global Gateway aims to mobilize up to 300 billion euros of investment by 2027. And that's it on Business Incorporated. Thank you so much for watching. I'm Vladi Williams. I'll see you again tomorrow. Bye for now.